Hello again, Maverick traders, and welcome out to your weekly currency room where we break down this week's price action and talk about our upcoming week ahead. What a week. Let's get into it. We'll be taking a look at this week, breaking down the price action, looking at our broader market analysis, taking a look at our currency baskets, and talk about our big opportunity ahead next week. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
It was quite a messy week this week. If you been paying attention to the markets and the news, it was a very busy news event so far this week. Most importantly, we had the U.S. inflation number. That was the big focus. There's one thing to highlight here. All the numbers out of the U.S. was inflationary. We had the PPI that was stronger than expected. We had the CPI that was stronger than expected. And we had the numbers today. The Empire State Manufacturing Index was stronger than expected. So all the numbers are strong. And the big question is, what did the dollar do? And what did the bond market do? So the bond market remained strong, but the US dollar remained flat. And that was a bit confusing, where we saw things kind of breaking down as far as the correlation goes. Now, surprisingly, equity markets, all the news was negative, the equities, and strong, the bond and the dollar. And equity markets are actually flat for the week. So this is a bit of a head scratcher because, textbook wise, everything should be falling apart. That was not the case. So we really have to wait till next week when we get the FOMC statement and we'll get a little bit more information of how that could affect the markets. But it was not really a big moving week, even though it has all that potential to move the markets. Outside of the U.S. markets, the crypto markets had a bit of a volatile week as well. We had a false breakdown to the downside and followed by a quick recovery. So that's, again, we always talk about looking for confirmation. So initial breakdown, and that got quickly reversed. So a little bit of a back and forth in the cryptos here. So outside of the U.S. data, let's take a look at the data outside, other than that. The U.K. Employment report was not that great. We had the ECB, which again raised rates unexpectedly. But the aftermath of that was quite terrible because the euro, the statement was actually quite dovish. So that didn't really help the euro. And that was one of the best trades that we had so far this week. Outside of that, we had the China's number that came out a little bit better than expected as well. You can see the industrial production was actually up stronger there. So that actually helped the Australian dollar there. So it was a explosive week, but we just didn't get the explosive moves in the markets. We'll take a look at the charts here. So let's just break down last week's numbers and take a look at where we are. So interestingly, as you take a look at this percentage return, you would see that, okay, well, this was not a big moving day, big moving week. We had the S&P mostly flat. BT is slightly up. Crypto is up. Gold is mostly slightly up. And oil continues to move higher in a very quick fashion. I think we are up about 35% in just the last few months here. So that's a big move. That is also inflationary and causing some of the moves or putting pressure on the inflation numbers. So looking at that, it doesn't seem like it was a big percentage move. But then take a look at the week so far. So we had a massive down day today. We could have had a big down day on a Wednesday or the CPI or the PPI, and that was not the case. And so when you take a look at this price action and you take all the noise out, this is just a range bar price action. And I think I kind of provide that caution yesterday is where when you have this range bar price action, we want to be looking for confirmation which way it wants to go, higher or lower. Right now, you can see that it's not breaking higher and it's not breaking lower. It's trading within that range. So we'll find out. Maybe next week we'll have a better catalyst. But so far, it's a bearish close for the week. The sentiment looks negative going to next week. But until we break these levels, we don't want to get ahead of ourselves. So looking at the number outside of that, let's take a look at the currency numbers. And what a unexpected week. We have Australian dollar being one of the strongest, and the Canadian dollar. So those two currencies has done really well this week. Australian dollar was not in a trend. That was a bit of a counter trend move, where the Canadian dollar just continuing to move higher. But on the other hand, Kiwi did not take part in that rally. So Kiwi remains absent there. As you can see that the yen and the dollar was not a big mover either. I know a lot of our focus this week was on the USD pairs. That's not where the action was. The action was in European currencies: Swiss franc, euro, and pound. So with the recent rate hike and a poor price action and a dovish outlook, it seems like we had a big rally in European currencies in the past few months, and it seems like that's where the air is, and we probably start to see some air coming out of those currencies. Now, outside of the currency market, crypto markets again, what an odd sort of numbers here. Bitcoin Cash and Litecoin doing the best, but look at Ethereum, not so much. Bitcoin up 2%. So one of the things you got to take a look at this is that this is a market where you have to focus on what's moving, not what should move, but what's moving. This week, the dollar should have moved. Maybe the yen should have moved. Dollar yen was a good pairing, but that was not the case. So always focus on what's moving. It's very isolated markets where you see certain things pick up and certain things don't do anything, like the Kiwi. Kiwi was flat. So let's do our quick market analysis and take a look at where we are as far as the scoring system goes. So just looking at where we are, we are right at the support. 20 to moving average, below the 50 to moving average. Score is looking a little bit more to the bearish side. So I have a bit of a -1 for this week, but like I said, whenever I see a range, I'm a lot more cautious on that range by price action because I need that confirmation. When you are in a trend, when things are making higher highs and a higher low, it's easier to kind of follow that, or you want to be trusting those movements. But when a range by price action, we can go back and forth. Let's take a look at the other piece of the puzzle, the bond market. You can see that the bond market is holding steady. I would have expected the bond markets to really break out because all those numbers were very inflationary, but that's not the case. So this is where you have to really sit back and kind of look at this and say, what is the price telling us? Is the lack of participation saying, well, this move's already done? Is all of that priced in already? Or it's just, the timing wise, it's not moving right now, but eventually it will. So this price action, again, is showing a lack of participation. But a lot of times when we see that, we want to be looking at the other way. But the question is that the right trade here? And I think there's a bit of an indecision here. I don't really love how things move this week. So I'm very cautious on both the bullish and the bearish side on the dollar. Now, looking at the crypto market, you can see false breakout. We had a beautiful break. And this is why you want to use a confirmation candle. The initial break is not enough. We got the initial candle, and you can see right after that, we just snap right back up. So where do we stand with crypto? Well, the outlook still remains pretty bearish. But for now, the readings are a little bit better than what we have seen in the past few weeks. So let's take a look at the schedule next week. And again, if you think this week was a busy week, next week is dynamite. I mean, take a look at 4 central bank announcements. We have, let's just start from the top here. So the Canadian CPI that comes out on Tuesday. We'll be paying close attention to this. We know the CAD is actually, moving really well. So we'll see if those numbers are inflationary and how does the Canadian dollar react to it. We have the FOMC on Wednesday. We have the Swiss bank on Thursday, early morning. And then we have the British pound later that morning. Then on the later that night, we have the Bank of Japan rate statement as well. So 3 central banks just on Thursday. And then on Friday, we get some economic numbers, the services and PMI from the US and the Eurozone. And in between, we also have the pound CPI. We have the Kiwi GDP. So as you can see, this is a very busy week. 4 central banks and 1, 2, and 3. So there's 3 economic reports that we really have to actually 4 economic reports that we have to pay attention to. So next week you got to really save your chips and wait for those opportunities to come, because that's really where the big move is going to happen, especially around this center bank. This week, the biggest move was on the euro, and that came right after the ECB rate statement. So next week when we go into the S&B, I'm actually closely watching this one. Take a look at this. They're expected to raise rates by 25 basis points. But what's the price action in the Swiss franc? It's not that bullish. I think this is where we need to start looking at the other way. Maybe the trends are changing. And Bank of Japan, who knows when they will make a change. But for now, the Bank of Japan looks like, we have the Bank of England is expected to raise rates as well, but Bank of Japan probably stays the same. So we'll see if this next week will bring a breakdown on the Japanese yen. So as we look at the next week, again, equity markets, the outlook is uncertain. Range for price action. We can talk about our opinion, what I think about it, but at the end of the day, is the chart telling us so? And right now, chart is not telling us that it's going to fall apart. VIX is very low. Everything's sort of in this environment where nothing really, is happening. Major movements are happening on upside or to the downside. Now, central banks, like 4 central banks, keep a close eye on it, and we have these economic reports. So I will be mostly looking for opportunities around the news event rather than just trading outside of it. I think there's enough ammo that you need next week just to trade those news events. So let's do a quick currency analysis and take a look at charts and see where the trend and the velocity score is. Let's just start with cryptos. Now, Bitcoin, again, all these charts I'm going to quickly browse through. I'm still not interested in playing any crypto moves here. So we had a big move, but overall the trend is not going anywhere. Velocity was a little bit better. So only thing that really broke out was this little Bitcoin Cash. But again, big question is this just a bear rally? Well, that's what it is. Trend is down, but we got a big move to the downside. A big move to the downside with the rally here. This is still not making a higher high or a higher low. This is still in a bearish pattern. Same thing with the Litecoin as well. Now let's go into the currency market, because this is where you're gonna look at charts and be like, well, what is going on here? Look at the dollar. Dollar this week had every reason to rally. It did not. But does that mean we look at it to the downside? Well, not really, because this is still ranging. Remember, we had a massive move in the last month and a half, about a 6% move onto the upside in the US dollar. So you can see that right now we're consolidating. It's not breaking out, which is a bit frustrating, but it's not falling apart either. So until we break below this 22 moving average, perhaps we can have a little bit more pullback. But as of now, this is still a high base. Velocity, not going anywhere. So dollar has really been a very difficult trade this week. One of the trades that have, textbook-wise should have been the best trade, actually was not the best trade. Now look at the Japanese yen. What is it doing? It's just slow basing. Is this one you want to buy? No. I mean, this is still not a buy. This is still selling on the rally. So let's just put this on the shelf here. If you look at this move, we are slowly basing here. So it's not really breaking down, but it's not breaking out. So it's not a currency that I'm really interested in. I'll take a look at this next week when we get the Bank of Japan. What I'm interested in, where the outperformance has been, and though that's where we are seeing some sort of turning points here. Look at the Swiss franc. If I take a look at the Swiss franc performance, it's one of the best currencies that we had since 2022. And we haven't really given up much of those gains. So right now, this is below the 20, below the 50. Now trend score is down to a -2. Remember, it used to be sitting at +3. So a big shift. As far as the score, the velocity goes, you can see it's just slow basing here. We are not really getting any bumps or any rallies in this. We're just slowly moving lower. So I think as you take a look at the direction, right now it looks like downside. It looks better than the upside here. Now looking at the euro had a big move down, and we had a nice inside candle. I was actually looking for either a bear rally or a base. So I like this movement here. I have my eye on this level. As it breaks below here, I really like to get short on the euro as well. But for that, I need confirmation. Remember, we got a breakdown here. This is the prior support, which is now the resistance. We don't want this to break out of that resistance. As long as it stays below, I like it further to the downside. And velocity wise, it's that's we had about after a big sell off, we are having a bit of a rally here. So we'll find out where is it going next week. Now let's take a look at your pound. Well, pound is also slowly weakening as well. Remember, this was also one of the best currencies. Very low volatility. And here we are. After slowly moving down, we got a big move down over here. So we are below the 20, below the 50. This is also at -2 as well. And velocity-wise, take a look at velocity. It's making a nice low base here. So if you have been used to just trading these currencies one way, which that's how I've been trading those, I think now they're finally looking better to the other side. Now let's take a look at the Canadian dollar. And I know this is a currency that kind of just flew right on the radar here because we talk about how the dollar and the CAD has been kind of moving along together in the same direction. But again, dollar has been the leading one. And we haven't really traded the CAD here. But look at that right now. We got a breakout here. And looks like it wants to break out higher. Velocity-wise, it's also sitting at about a +1 and a +2 here as well. So this is a very bullish price action. One of my rules is that if there's something sitting at a +3, +2, I don't want to short them. I want to only trade it one way. Right now, we are not getting a whole lot of pullbacks. Look at what's getting. We got a big move, and we get a sideways price action. We get a big move, we get a sideways price action. This is where you want to trade it only one way. Right now, the direction is to the upside. Now, let's take a look at the Aussie and the Kiwi. Well, if you look at the Aussie looked terrible. I was actually looking at Aussie for further breakdown. But here we are, trying to climb higher. Not so great looking candlestick here. But again, this has made a decent recovery, getting above the 20 and above the 50 here. So the trend score is not really going anywhere. I'll give this a +1. But as the velocity goes, it's also a little bit better. So if you have to take a look at growth currencies, I mean, this is doing a lot better than the Kiwi. I mean, look what Kiwi is doing. It's doing nothing. You got to recall last year, 2022. Remember, Kiwi did not do much for the long time, and Aussie was the best performer. And that flipped back in late September, October, and Kiwi had one of the best rallies here. So remember, that's where we want to be trading, where the momentum is. There's no momentum in Kiwi here, so let's not try to buy the Kiwi. Try to call a reversal here. It's not giving us any signal yet. So let's go down to our trend scores here. You can see it's a pretty spread out board. We have now European currencies down as a -2 along with the yen. So what do you want to buy that against? Well, dollar is still at a +3. CAD is still at a +2. But what if the dollar is not doing anything like this week? Well, I think this is where you have to go for the CAD or perhaps the Aussie. So we'll be taking a look at those pairings as well. As far as the velocity goes, you can see there's a whole lot in the middle. And we have the yen and the pound being on the downside. And we actually had a euro and the CAD a little bit on the upside. I think the CAD is just the one that looks the best across the board. So I'll be taking a look at a lot of these Canadian dollar crosses as well. So let's get into it. Let's take a look at potential trades ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just start with where the S&P is right now. You can see that we kind of closed at the lows of the day. So not so great price action. As we go into overnight or over the weekend until next week, the pressure is more towards the downside than it is the upside. So let's just take a look at the setups that we just discussed. The Canadian dollar looks the best. Let's take a look at Canadian dollar basket first, because how far can this run? So we have the prior resistance approaching very quickly. So this is the first level that I will be very cautious about. because we usually prices stall around these areas, and after that you can see that the next level of resistance is right here. So we are pretty close to this level here. You want to be very careful. We don't want to get caught up in any sort of a false breakout. If this is breaking out, I want to be looking for confirmation candles on those. But let's take a look at the setups here. The pound CAD, that's the first one. Take a look at that. We broke below the 20 to 50. The 20 is moving below the 50, a bit of a death cross here. So, I mean, right now, you can see this thing has been a monster move. So let's drop some lines here where we think next level support is. So the pound CAD could easily break down towards that 166 area, sitting up at 167.45. That's the daily chart. Let's bring it down to a lower time frame. It does look extended, but look at the pattern here. Bear rallies or bases. So that's a setup here. If you're looking for an entry, look at the beautiful moving averages are moving lower. Look for bear rallies, look for bases to enter those trades. Now, same thing goes with the pound Aussie as well. And this is the second best currency pairing is onto the downside. And you can see on the daily chart, they all are now below the 20 to 50. So this is again the time where I'm looking to trade those currency pairs that have been only trading one way, which has been to the upside. Look at the Euro Aussie prior support, which is now prior resistance, which is now the support, and this is still in there. So I would love to see a bear rally as long as it stays below the moving averages to kind of look for that level to kind of break. Same thing goes with the Euro CAD daily chart. We have the right of the support here of 143. But if it breaks below that, I think that's where there's a lot more downside risk on some of these currencies. Now let's take a look at CAD Swiss franc. I mean, take a look at this one, how this thing has been below the 20 and below the 50. Look at how terrible this currency pair has been since last year. We can just draw some lines here, but this has been very weak. So look at the gradual recovery that we are seeing with very little volatility. And this is where you really have to pay attention to. And one of the things that I've been getting a lot of questions on is the velocity or the intensity of the moves. These are slow moving moves, which means that you have to trade in a higher time frame. If I go on a 15-minute chart, there's a lot of messiness here. The only way to trade these moves is when you're trading on high time frame. And here's an example here. You can see that it was going sideways for a little while. It did break above. As you can see, after that, it's been just making small bases and breaking out. It's a little small base and breaking out. And look at a big move right here, and here we are making a base again. You will see the very similar pattern in a lot of the Swiss franc crosses. Let's take a look at dollar Swiss franc as well. Same thing. Look at the dollar Swiss franc. It's slowly moving higher. So it's not explosive moves, but if you look at the percentage move, they are easier to hold because it has less volatility and it just continues to move. So look where we are in the dollar Swiss franc. Dollar Swiss franc is right, getting close to that resistance here. This is where the massive drop came back in July, and we're slowly grabbing that level. So I am paying a close attention to the Swiss franc this week with the SNB as well. See if there's any sort of change in the statement, and I think we can catch some of the movements in some of the Swiss franc crosses. Not just the dollar Swiss franc. You can take a look at CAD Swiss franc. Look at Aussie Swiss franc is breaking above the 20 to 50. We are seeing, not the Kiwi Swiss franc, but you can see how the trend has been changing on some of the Swiss franc currency pairs. So same thing goes with the euro dollar. If the dollar looks better for the upside next week, then look at that. It just broke that level. Try to have a bit of bear rally here and still kind of ended lower. So the next level support on this one is right around here at about 105.14, and after that you can see there's a steep drop right after that. So the big question is that what the dollar is going to do next week. Like I said, I'm very disappointed this week where dollar had every potential and it didn't do anything. But at the same time, I can't really get behind this and say, well, I want to short it because it's above the moving average, it's consolidating, maybe the timing is off. But right now, there's nothing telling us to be short on that as well. So make sure you're paying attention to where the velocity is, paying attention to what's happening, and focus on relative strength and weakness. Because timing-wise, sometimes things just don't pan out. We get this disconnect disconnection a lot as well. Take a look at gold market this week. If you look at gold this week, it had every reason for gold to kind of be on the weaker side. But look, we had a rally. Although it's a small rally, but I mean, we were down quite big, and look at that big reversal that we got here. So that's why, there's some weeks where things kind of break down, but that's okay. As long as you are consistent, we can control the markets, but we can choose when to be active and when not to be active. And whenever you're in doubt, I always like to say, stay out. So let's wrap it up here. FOMC again will be in focus. They are not expected to raise rates, but the question again will be in the statements. But outside of that, we have other central banks that are looking to raise rates. But again, pay attention to the statements and looking to trade around the news events. I think that's really where the big opportunity is. Outside of that, we want to be staying in cash or staying in currencies that has the least volatility and easier to hold. So focus on velocity and currencies in play, and get ready for next week. It's going to be a busy week. We'll be meeting live for the FOMC on a Wednesday, so make sure you go ahead and register for the class. Outside of that, we'll be keeping everyone up to date, and let us know if you have any questions. Thanks everyone for joining. Have a good weekend ahead, and we'll see you guys next week. Cheers.